Good morning, this is Graham Bibby here on the 10th of December 2013. Today I want to talk to you about why we pick companies with strong earnings growth, consensus earnings growth over the next 3 to 5 years that is considerably higher than the average market, such as the Standard & Poor's 500. But also why I always advocate diversification with a minimum of 10 stocks and preferably 20 stocks, depending on how much money you've got to invest. And I want to show you today a very good example of why we need to do that. So when I'm looking at companies with strong earnings growth, I'm relying on the world's top analysts who research these companies. And in some cases, there may be 20 analysts following a particular stock. And if 16 of them tell me the forward-looking earnings growth is, say, for example, 15% per annum or 20% per annum, I know that is a growth rate which is 50% to 100% more than the market. And then I look for the PE ratios that are no more than 1.2 times that. Quite often they're at a discount. So the thing is, even though you may have 16 analysts forecasting something, sometimes surprises can happen. And in the last 2 days, certainly with 2 of our stocks, a number of surprises happened which could not be forecast by the market, which is why I want to show you why diversification is important. First of all, I'd like to start off with looking at the market, general market. This is the Standard & Poor's 500 with the arrows pointing on the left. And here, this line here where they've got the circle going up, that is what they call a resistance level. So when the market's rising to that, it's backing off. And this in the bottom here is the support level. As the market falls to that, it starts rising again. And overall, the trend was up. And then eventually, on 1, 2, 3, the fourth attempt, we had a breakthrough. And on GAN analysis, WD GAN analysis, which is what I used to teach when I was the chairman of the Technical Analyst Society, 90% of the time, on the fourth attempt at a level, there's a breakthrough. We broke through, we tested back here, we went to new highs, we tested back here, and then the market's been moving higher. After a sideways move like this and a breakout to the upside, we expect this to be carried on for some time. This is some of the stocks that we're looking at and have given new buys even today. This is Facebook. We gave original buy at 25. It was a sell over here at 50, and then it was a buy back here on this breakthrough, and it's another buy right now. This stock looks good. Its PEG ratio is higher than our normal, but Facebook is a special situation, and I believe this stock is ready to go much higher. Apple is another stock. Its earnings growth aren't 25 to 28% per annum as it used to be. It had gone down to as low as 11% forecast earnings growth. Now it's around 15, but its PE ratio is somewhere in the region of 11, so it's at a discount to its growth rate. Now, you'll all know, my listeners, that we originally bought this at 100 in 2009, and then where the support level is here, we sold it at 655, only to rebuy it back here at 425, and now we're at 566. And last night is another buy signal on Apple, so that's up 1.14%. Affiliated managers is something else on our list, up 1.2% last night. I could draw some nice trend lines here for you, so you can see how I actually do draw these trend lines. We just find a suitable bottom, and then all this trend line tells us is the rate of supply and demand for this stock. If we keep going up this constant rate, that means the level of demand for this stock is remaining constant. But here we've had an acceleration to the upside, so this line is steeper. That means the amount of desire for this stock is increasing, and we've just broken out to new highs. That's another buy. Gilead Life Science is another one. 1.62% last night, another buy. Delta Airline, again, we were going up this trend line, then we've had acceleration to the upside, up 2.3% last night. This is terrific when we go back and we look at the overall market, which was up 0.18. So all of these stocks are considerably outperforming the market. Now, sometimes you get moves like an Alair here, the medical laboratories research company. It was 18 at the beginning of the year. It went all the way to 36. And then we've had some profit taking to this support level, but now we've had a breakout to the upside. And our stochastic at the bottom and our relative index has said now it's starting once again to outperform the Dow Jones, up a whopping 2.75% last night. Skyworks is another stock, very low PEG ratio. We've broken out of this sideways range here, up 3.38% last night. What's significant about that is the market's only up 0.18. The market seems to be stuck in a bit of limbo, but Skyworks has broken out to the upside and it's now powering ahead. New Skin, a lot of my followers will know, I've had this from way back. Right at the beginning of the year, in April time, it broke out again at 50. It's 131 at the moment. And every time we have a breakout like this was even at 60 and it's 131. Even the breakout here in September, test back here at 90. It's up 50% since October, and it's up 2% last night. The stock is still really cheap on a PEG ratio. Last one I want to show you, the good ones, is Spirit Airlines. It's relatively cheap on its PEG ratio. I'm just a little bit concerned that this was resistance before. I'd just like to see it break above that, then that will be a buy. So here you see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 stocks up almost 2% each, but then this stock here had a nasty shock in the market and dropped over 20%, 25% actually, in a couple of days. Now, if that is 1/10 of your portfolio, that means you would have lost 2.5%. But on the other hand of it, our other stocks are up anything from 1.9 to 3.3%. So that means overall your portfolio is still protected, even though one particular stock had a shock in the market and dropped like that. I think it's an overreaction to the downside, but still, this is all about money management. This is all about a process. This is all about a methodology. This is all about my 3 decades of experience, because the key to long-term returns is not how much you make when the market's with you, but how little you lose when the market's against you. So this is Graham Bivvy here from www.grahambivvy.com saying, I hope you enjoyed this lesson about money management. I have some really good buy signals right now. If you want to contact me, you can contact me at ceo@richmondth.com. And our portfolios that started at the beginning of the year are currently up in the region of 28%. I'm still looking for a target of 30% this year. If you'd like to enjoy those kind of returns, please send me an email. And I really look forward to hearing from you soon. And let's get ready for the festive season.